Welcome to the daily edition of the Market Rag for Sunday, December 2nd, 2007. Well, the market's all gapped up in the morning, only to kind of drift lower throughout the course of the day with one little spurt up there right at the end. Everyone seemed to do pretty good today, except for the Nasdaq, which was down for the day. Oil and gold continued their slides down, being down over 1%, with the bonds kind of slightly moving down at about 0.5%. Looking over the grid today, we have a lot of mixed signals out there. There's not a lot of conviction, a lot of gray area. Gold and oil are now down in the lower 10% of their range, turning red. And the large caps kind of won last week, having the biggest move up. After the big move we had last week, you can see the S&P has now come back to this old support area. We're getting a ton of extreme breadth sell signals right now, which makes me think this correction might have happened a little too fast. The Dow and the Nasdaq are in similar situations. You can see the Nasdaq actually gapped up into this area only to fall all day. Oil has now moved back down to this old support area. After gold failed to make a new high, you can see it's now dropped down into this support type area. Looking over sentiment here for the sectors, you can see the only green areas remain to be these consumer staples and the utilities. The only interesting one besides all the yellow out there is technology has kind of found its way into the lower part of these ranges. Your best performing groups on Friday remain to be these bottom feeders, the financials, consumer discretion, and the transports. Looking at the transports, you can see this great move up has now brought it back to this old support area, which again is a real common theme in the market right now. Same deal with the industrials, but you can see it actually gapped up into the area only to fall all day, which isn't the best sign. Our AG trade in this area seemed to outperform it a little bit and hold its own a little better. The financials have bounced back up into this resistance area, and there's a lot of good groups within the financial sectors that are looking pretty good, like the REITs for example. Telecom could be in a position to actually form a lower high in here right now, which looks nice for shorts. And the utilities still struggling up here trying to break through resistance. Well, let's give this market a rating. Basically, we have a very high number of sell signals right now from the breadth indicators, and so I think I'm going to go to a -2 until these get resolved. The main theme of the market is it's still real choppy out there. We weren't filled on any trades Friday, so the allocation hasn't changed here. We still have the majority of our money working in this long area of the market, with a little bit of cash sitting on the side. I want to keep this cash around just in case these breadth indicators kick in and we have some money to go short the market. Taking a look at our risk here, I've removed as much of the risk as possible due to all these extreme breadth sell signals we're kicking in right now. We have a few good stocks in good areas that I'm willing to risk it on now that we're at break even, but 14 is a nice small number to start our week off with. We have a small amount of risk in the market right now. I want to be ready for a down move because of all these breadth sell signals, and maybe try to make a few bucks on it if they do kick in. So we'll place a few short orders, but not too much until this choppiness kind of goes away.